April 2015. It's just gone past 10 o'clock. Welcome on this Easter Monday. I guess it's a bank holiday most places around the world, so you've chosen to attend here instead of walking through a local B&Q with your better half, choosing wallpaper and paint, or fixing that broken fence, or any number of the less important tasks in the world. So thank you very much for showing up this morning. On the economic calendar this week, it is light to kick off, but it starts getting heavy very quickly. It's a week for central bank announcements. Tomorrow on Tuesday, we have the Reserve Bank of Australia with their cash rate and statement. On Wednesday, it's the turn of the Bank of Japan with their monetary policy statement press conference. Also on Wednesday, we have a release of the minor FOMC meeting minutes. So FOMC minutes are now divided into minor and major. Major is the one where you also have a press conference, and minor is every other one. On Thursday, we have the Bank of England with their rate statement, and the week tops off with Canadian employment data. So there's plenty going on there on the calendar in order to provide some element of volatility, and hopefully we should be able to mark off some pips during the course of the week as we go. Handful of charts that I'm looking at this week, and actually it's one of those weeks because it's the first full week of the beginning of a new month and the first full week of the beginning of a new quarter, and we're already a few days in. If you were using flow analysis rather than pure technical analysis, I don't know why I'm differentiating really, but by flow I just mean the direction of the quarter or the direction of the month, and by technical I mean looking for a technical price point to act as support and resistance, looking for that kind of reaction level. So what with it being the early part of the month and the early part of the quarter, it is actually possible just to look at the direction of the flow on most instruments and say, well, I'll just go with the direction of the flow. So if the month is up, then we're buying, and if the month is down, we're selling. Same can be said for the quarter, considering they've started at the same time. But if the quarter is up, we're buying, and if the quarter is down, we're selling. And the price, in most cases, is kind of near enough to those levels to be making that type of assertion. And I don't think by any measure we've fulfilled the full quarterly or monthly range for these instruments yet. It is really early on, right? We're only a few trading days into that time cycle. But what you're going to find, nevertheless, is you're probably going to find me fighting it a lot this morning, and fighting the direction of those flows a lot this morning. But heck, it's what I live for. So we have a lot of general analysis, and we have a lot of directional bias, and we're looking for the SR levels, the support resistance levels, which will get us into trades in the direction of our bias. So first up this morning is the Euro USD, and there's a bit of a story to be told on the Euro USD. The specific area of interest that I have is the spike level there, right? That's the spike level, and I think that that spike represents a hard resistance area. And okay, so I'm just going to pause a second. We're getting a couple of messages saying that there's no sound coming through. If FX admin can just confirm sound is okay, or if anyone else wants to tap their keyboards. All right, perfect. Right, so if anyone's not getting sound, and it's quite funny because they can't hear this, it may be just worth turning off any other programs that are using the internet resources, internet bandwidth, log out, log back in. That's a classic tech. That's a classic help desk. Uh, all right, just log out, log back in. That should fix it. Reboot. Right, so back to the euro story. So we're looking at that spike from March on the euro, and the price went and hit that quite hard, and then it stalled. So it's become an area of interest. It was a significant pullback on that spike, right? So if we're looking, if we're looking at the lows, we're there just sub the 105 handle, and if we're looking at the spike, we're there above the 110 price handle. So there's a 500 pip range there, and so our consideration ever since that spike was that the euro has to be sold into up at that level, and then that is what we proceeded to do when the price reapproached that level from a couple of weeks ago. We're coming back up to that level again now, and so what I would be looking for, I guess there are two issues here. First, we're going to look at it from the point of view of a trigger for an entry at that level. And what we're going to do is we're going to move from a scenario where we're taking an aggressive entry and where we start adding trigger conditions in order to make our entry a little bit less aggressive. So if the price is coming and hitting up there, what I'd be looking for is just H1, H4 failure. The idea is that if you get H1, H4 failure here, that is going to be acting as a confirmation that indeed you have found the Holy Grail. And there is a resistance actually there, and it is going to hold, and it's going to hold as a swing level, right? So, we're talking about taking a trade here. We're not talking about looking for a 10 pip bounce or a 20 pip bounce, but actually what we're looking for is structural resistance, which is very much a different kind of tale. There's a different story to be told here on this instrument. So you get a H1 bearish bar, you get a H4 bearish bar, even if she pushes through that level a little bit, but you get that bearish close off of it. In the first instance, that is the kind of trigger that I would be looking for to be initiating the short trades at that point, and that H1, H4 bearish bar, it would act as act as a trigger in order to be entering into the short trade. So this is the first. This is the kind of first, in fact, the most aggressive stance is just say, hey, anywhere around that 1050 price area, 1040 price area, just take the trade. In reality, look, even if you took the trade at that high, it's really not going to cost you more than 30 or 40 pips to get involved. And if this is a structural resistance level, if it does turn out to be, then you're talking about holding that trade for a very, very long time. Which means potentially collecting hundreds and hundreds of pips off of it. And, I've been here and forecasted thousands of pips before. And those of you with long memories will remember that, sometimes those thousands of pips work out. And some of you with even longer memories will remember sometimes they don't, right? But there's a potential here. And when you're trading, the game is a lot about R&R. It's very much about R&R, right? So you want to get in as close to that swing point as possible. So, if you're risking 30, 40 pips, it's okay, it's cool, right? Because by the time the price has moved to 300, you're 1 to 10 on your R&R. But, if you're risking 100 pips to get involved or 200 pips to get involved, how far does the price have to move in your favor in order for you to be generating a decent R&R? And if you want to be surviving long term in this game, anyone who has one of the things which is common is R&R, and everyone will tell you that. But not R&R from the perspective, hey, 1 to 2, 1 or 1 to 1 or something actually insane like that. But the kind of insanity where you're talking 1 to 5, 1 to 8, 1 to 10, 1 to 20, that's the kind of R&R that has you surviving in this game. So, yeah, we're looking for a tight entry. I'm looking for significant move off of it. Eventually, I very much suspect that, there's going to be some element of support on the nose around the 106 handle, but we expect that to be breached. A retest of the lows, and that would, if the price is retesting the lows, that will definitely be breached. And I don't think it's time to stop talking about parity yet, right? So even if she pushes higher from here, even if she breaches this level, there's something around the 113 price handle, which is of similar interest for a swing on Euro USD, but from a structural point, in the first instance, it's the spike top. All right, so we're talking about aggressive at the level. We're talking about H1, H4 bar if you're looking for confirmation. After that, it's just everything that you know about making chart art, right? So you can mark a lower trend wall, and you can say, you know what, I'm a little bit unsure of this, so long as the price remains above that trend wall, and I'll wait for the trend wall to be breached. So whenever the trend wall is breached, I will take my entry at that point. If you want to be even a little bit more conservative than that, you'd say, well, here's the weekly open, right? This is where the week opened this week, and I'm just going to wait for the price to break down below the weekly open, because once the week has turned bearish, then why not to look for a bearish follow through to the downside at that point after the week has turned bearish, right? So why wait, or rather, why try to get ahead of the curve while the week is actually still bullish, while the price is above the weekly open? Let's just exercise some patience and wait for the price to break below 109.50. Let's have some consecutive hourly H4 bearish bars below that price level, and then try and get involved on the back of the weekly flow, looking for failure here, right? And that's just with an understanding that sometimes the price tends to sit around before you witness failure, right? So there are a lot of different ways to get involved with that bias, but and the more conservative you are, the safer it tends to be. So you wait for the failure. If the failure happens, you say, right, that's the first sign. Let me wait for a trend line break. That's another sign. Okay, the direction of the flow is changing. Now if I'm not on board, we don't really want to be missing the train. So you can design a lot of different triggers for this. But certainly it is a level of interest up here on the Euro USD. Okay. Isn't there a saying, don't buy the Friday high, which also support the scenario of a short trade if we get a failure at that high? Okay, so I'm not familiar really with that saying, but if it makes sense, and if it matches an observation of price behavior, then why not? There's nothing really wrong with trading on the back of rules of thumb. It's got to be the wildest ride that you'll ever take, but if that's how it is, that's how it is. Okay. That's the Euro USD. Let's look at some other ones of interest, right? So Euro USD is of trade interest, right? So I'm actually looking to enter into a trade on this and get back involved in the short movement on this instrument. Where else is of interest? GBP AUD. All right, so GBP AUD, the last time we had significant interest in GBP AUD was here on FX Street. In fact, you're going to find it in some of the recorded webinars on FX Street, and that time the price was floating around these upper 90s, 97, 98 price handle, and I was suggesting that the price would fall sub 190 down into the 89 price handle, and we were kind of looking at the 1,000 pip trade there, and the price actually, although she did do some sideways move first, eventually that target was reached. We were looking at a sine wave completion, right? So there's the sine wave there, and when you have a sine wave of this nature, targets, right? So the first target is there. That's your T1. And then you have another target, which is at the base of the sine, right? Which is the T2. And that base is sub 80, right? So we're talking about the 179 price handle. The price is currently above 195. Okay, so the last time we were looking at this, we came with 1,000 pip. We came with 1,000 pip target. This time, it's a little bit crazier than that, right? We're coming with a 1,600 pip target to the downside, and what we're coming with is a target, but not necessarily an entry. Beat that, right? So we have a suspicion that we think we know where the price is going, but we don't know when to get involved. So I'm looking for some triggers. I'm looking for some trigger conditions, and I'm saying, what could I possibly use in order to trigger this trade? Because I want to be involved in GBP AUD to the downside. Now, there were a couple of things of interest to me on this instrument, and a couple of events of interest. So technically, what is of interest is that massive spike that we had following the non-farm payrolls announcement. The other event of incident to me of interest is just that we have a RBA announcement coming up this week. There is talk that there's going to be a rate cut. It would be and it does seem that the market is building up an expectation, even though it's not shown on the calendar. All right. Okay. So on the calendar, I think the 5,000 economists that were polled or whatever decided it's going to be a hold. But in the press, there is some talk that there could be another rate cut, and so if there is that expectation amongst traders, if it happens or it doesn't happen, either way, it should be a volatile affair, and so I'm on the kind of lookout for that, see how that plays out, right? And whether it becomes the trigger event for a trigger trade, right? Beat that. But all right, so look, I have my target to the downside, and someone's asking what sine wave is. The you, Mr. C, you really want to get onto wmdforex.com and check out the online training resources. There's a 1.5 hour video explaining what a sine wave is. But in short, it looks like this, what's on my chart, right? And there are a lot of rules about how it's drawn and how to utilize it, but I don't think this is necessarily the best time to go into detailed explanation, but a sine wave, it just looks like this, right? It's over and under, or under and over, whichever way, it doesn't matter, but that's what a sine wave looks like. Right, so I'm looking for a technical trigger short on GBP AUD, and the idea that I have, there are a couple of ideas, right? But our T2 target actually remains valid so long as the price remains below the strike price, right? So she reacted at the 2, and and our expectation is, on a sine wave, T1 is pretty much always reached. We have a 100% success rate for the price reaching T1 when you have a sine wave completion. And after that, it tends to be about 50-50, right? But we would say T2 is often reached, right? Right. So T1 is always reached, and T2 is often reached. So we've done the all waves trade already, right? Now what we're looking for is the often trade, right? That's what we're looking for. So as far as near-term triggers are concerned, we've got a couple of walls here, right? So just connecting these spots here and these spots there. And so what I would say is that if you're looking for an aggressive entry, you're going to be going at the wall. You can go at the near wall that the price is approaching, and you can fade it to that upper wall. If it happens that you're getting H1, H4 closes above that level, then that invalidates that wall, and that would be cue to kind of sit aside and wait and just let the price action develop. But once those walls are invalidated, they're invalidated. It means that there's nothing left for you to do there's nothing left to do with that analysis, right? So remember, T1 always, T2 often. If she's gonna change direction, then the walls that I've marked would be a damned good place for her to be changing direction from. And so if the walls aren't holding, then we'd say, all right, the analysis is invalidated. We're going to sit aside. So if you're looking for a more aggressive stance on GBP AED, then it's about these walls, and it's about the resistance that these walls represent. Right? In fact, there is something which is just a little bit higher too. Where you'd be marking it off the spike there. So there are three spikes here. There's one there. There's another one there, and the lower one is just connected against the hook. All right, so you'd be looking for failure off of those levels, but if she fails to fail, then you got to sit aside and leave it alone. So after that, it's the same rules like when we looked at the Euro USD. All right, after it becomes the same rules like when we looked at the Euro USD. So we could say, all right, we've got our hard level where we're looking for a hold on the instrument. But if we want to become less aggressive and become more conservative, we need more and more confirmation. Then why not just to wait, right? Why not just wait for the price to actually break down? Our month and quarter is here. Our month and quarter is here, right, above the 94 price handle. So that looks like it's somewhere maybe around about 94.50 or something like that. And we just wait for the price to break down. 94.60 it is, right? So we'll wait for the price to break down. And once the price has gone and closed below 94.60, H1, H4 closes below that price level, then that becomes the trigger in order to take entry on the instrument. And here then we're talking about following the flow to the downside rather than a technical support resistance trigger, right? So we have the analysis and then we have the approach, and quite often the approach is more important than the analysis itself, right? So we think she's going to go down. We think that there's a lot of room to the downside. We have reason for believing that. But if that's going to happen, these walls have to hold it. And depending on how aggressive to conservative we want to be with our entry, the ultimate conservative entry would be to let the direction of the flow change first. Somebody said it looks like an uptrend. It is, right? It is an uptrend for now. So and so that's why you have the different approaches, right, to which will allow you to lean somewhere between that aggressive and conservative entry. But that's the GBP AUD. We think that there's room to the downside. We're looking for a short play. In the first instance, I'm just wanting these walls to hold. And if the walls are holding, then that will probably be for myself a good enough trigger in order to be getting involved in this trade again. We need to take a look at her sister, right? So this is the Euro GBP. This is Euro GBP, and here I've marked a wall again, right? And it's a little bit awkwardly marked wall. You probably don't see walls marked like this often, but it's just taking that low there, and we're taking that high there, and we had quite a good explanation. Oh, here we had quite a nice rejection off of the wall there, and so what I'm saying about Euro AUD is that if GBP AUD is short, then in all likelihood the Euro AUD is going to be short too. And what I would like to do is play short on the Euro AUD off of the wall. Again, you can go aggressive when the price hits the wall. You can wait for a bearish bar off of it. But what I would say is that so long as the price remains below the wall, even if she creeps on the underside of the wall, that wall to me is resistance. And so long as the price is under it, I would maintain a bearish bias on Euro AUD. But if it happened that you went and had your H1, H4 candles breaking through and closing above that wall, then at that point, leave it alone, right? There's no point messing about. If the price doesn't want to play, don't play, right? So it's the Euro AUD. You just mark that wall, and I think the wall is a short trigger. And again, you just need your H1, H4 confirmation. It'll be good enough. But H1, H4 price bars, consecutive closes above that wall, it's invalidation. And at that stage, you have to leave. You have to leave that position alone. Just a quick note, generally on exposure. So what you don't want is to be trading GBP AUD and Euro AUD and exposing yourself to both at the same time. It's not a problem if you're involved in a trade on one and it's significantly in the money and then you're taking the trade on the other. That's all right. That's all cool, right? But if you find yourself exposed to one, then don't be adding exposure to the other unless you divided prior to taking your first position that you're going to be splitting your intended exposure between the pairs, and you've already calculated what the cost of that trade would be, right? So I hope I don't have to remind anyone about that here, but it wouldn't be the first time anyone got into trouble doing something like that. So it's always worth reminding. So you have to kind of choose. You have to choose who you're going to go to bed with here. If it's going to be the Euro AUD or the GBP AUD, but GBP AUD presents a technical trigger and it presents a target. And on Euro AUD, we just have a technical trigger. But because we have a significant target on GBP AUD, we can kind of imagine, we can be prepared to imagine that there would be actually significant room to the downside on this instrument too. Okay, and again, if you're looking for a secondary trigger, you might just want to wait for trend line break or something like that, and then to be tapping the underside of that once the direction of the week has turned bearish. But Euro AUD, it's worth keeping an eye on too, just because there is a matching technical level alongside that GBP AUD. All right, so look, these are the ones where we have trading interest, where we're interested in initiating trades: Euro USD, GBP AUD, Euro AUD. The next lot that we're looking at is a little bit more general analysis, flow analysis, and there may be some trading with results from it, but it's not of immediate concern. So first up is the Euro GBP, and Euro GBP. There's a bit of a price funnel forming here, right? So You want to be doing something like this, just in the first instance. All right, let's just move that to there to make it make sense. You're marking something like that. All right. Um, all right. This rally that we're looking at in the Euro GBP, right? So she's rallied to the tune of almost like 400 odd pips since the beginning of March. Now, um, that's the strongest rally that we've seen on Euro GBP in probably a year. All right. So she's rallied before 200 pips, 280 pips, or something like that. Right. But 400 pips, that's a big deal. It's quite a big move on north on the Euro GBP. And I'm not guesstimating a change in the overall direction of the trend. Euro GBP probably has to be the most trending pair in the entire history of trading forex ever. Well, for as long as the euro's been around, anyway, right? But she either tends to be moving up, and if she's moving higher, she just keeps on grinding in that direction, or she tends to be moving down, and if she's moving lower, she tends to continue grinding in that direction, right? So um, what I'm kind of cautioning on the Euro GBP is to say, she's moving higher right now, and don't be assuming a resumption of the bear trend immediately. The bear trend will resume. I have little doubt about that, but don't be assuming that as she rises. Okay, don't be assuming that as she rises unless you have a very good reason to do so. Unless you have a really good reason to be looking for a technical short somewhere, don't bother. If she's going up, just let her go. And and you might be better off trying to chase her north than trying to chase her south right now. Um, the levels I'm looking at, and you'll probably understand this one straight away, right? First up is just the direction of the flow. So that is coming in around the 72.30 price area. And what I'm saying is that so long as the price is remaining above 72.30, even if she's falling towards that level, so she's moving 110 pips down, and on Euro GBP, it's a big deal, 110 pips down, considering that her real true range on a daily basis actually is 30 or 40 pips, right? So a 100 pip move on Euro GBP actually is a big deal, right? And the MQW, that is monthly open, quarterly open, the weekly open. The Y there is the yearly open, right? So we just use these levels in order to determine the direction of the flow. All right, yeah. So just in the first instance, you got to keep your eye on the direction of the flow here. You got to look at the you got to look at that 72.30 level and say, so long as the price is holding above that, then I don't really want to try and get ahead of the curve or try and get ahead of the flow on this one. Even if she moves 300 pips above that level, and you say, is Euro GBP long or is Euro GBP short? You say, well, she's long because the quarter is up, right? It doesn't mean you're necessarily buying at that price, but if the month and the quarter is up, then the month is up, and that represents the direction of the flow. The other wall that I've marked here is you can kind of see that hourly double bottom there, right? So you can just take a wall and mark it off of that, right? You just mark those lows. Like that, right? And that's it. So I think if the price pulls back here, that's going to be a trigger for a long trade. And actually, so long as that holds from a technical point of view, you'd probably be good to long off of it. And if it breaches, right, then you have to kind of sit aside on the buying and wait until the reaction at that monthly, quarterly completes, right? But the advice about Euro GBP is just mainly, if she's rising, don't necessarily be selling it. If you want to be selling it, you're looking for resumption of the bear trend on the Euro GBP. She needs to be below that wall, and she needs to have a change in the direction of the flow. That's when you get serious about getting involved in shorting Euro GBP. Otherwise, there may be a couple of 100 pips higher on this instrument yet. All right, so just kind of watch out for that. I don't know if that's necessarily going to be a reflection of euro strength or whether it's going to be a reflection of pound weakness. Let's hope it's a reflection of pound weakness if this one pushes higher, considering that I'm all prepped to be shorting the euro at some point this week if my trigger conditions are met. But that's the euro GBP. Dollar Canadian. All right, so it's going to remove this one. All right, dollar Canadian, and there are a couple of walls that you want to mark here. So this is the first one. There's just support to support, and there's another one which is here, which if you're looking for the origin of this one, you're going to find it actually on the hourly time frame, right? So it's the hourly overlap. It's the low on the hourly overlap. That's the one you're going to be looking for. And I had a suspicion last week that dollar Canadian would move a little bit lower, but it was more suspicion, less trade. And what is it that they say about suspicion? I don't know. I've forgotten now what they say about suspicion. It's something to do with my memory's failing me. Suspicion is a companion of mean souls. That's what they say. You have to be mean if you're going to be a trader, right? Just a little bit. You have to have a bit of a mean streak. But yeah, we had a suspicion that the dollar Canadian would move lower. It wasn't a suspicion that we were able to necessarily take advantage of. And there are a couple of issues here, right? The first is that there is a support wall here. And from a structural point of view, so long as the price remains above the support wall, then technically the instrument remains a long. And so what you would be doing is to be looking for bullish bars here with a view that the dollar Canadian is going to carry on pushing higher. And that is one trading idea. It's one trading perspective. What I've always found more interesting, though, is what happens when these types of walls are breached. Because what I tend to find is I have a preference for trading a wall which has been breached rather than a preference for trading a wall to hold. Right? Just tends to be my preference. And because what quite often happens is that when a wall like that is breached, the price will break down. It'll give a sharp test on the underside, and then it would follow through at that point. Right? That's how price behavior tends to play out. So I recognize very well that it's a support wall, and the overwhelming bias when the price reaches a support wall of this nature is for the wall to hold it, for the price to turn, and for the trend to resume, right? But if you're patient and you're prepared to miss the resumption of the trend, looking for a breach of the wall, it tends to be a very, very profitable trade. So dollar Canadian, I'm looking for the breach, and if it does breach, then a technical test on the underside that triggers your entry. It would be a sharp pinpoint entry, and we're looking there, right? We're looking at around about the 2280 area to the downside in the first instance, and after that, it matters what happens at 2280. If 2280 is breached, then just keep on looking for follow through to the downside, and there is room here for her to head all the way back to 115, 116, and to go and retest that yearly open. It's where the prices were in January. There is room for that, right? But a lot of that depends upon the word depend, right? So if it is going to happen, it has, we just have to wait. You have to let it trigger. If the wall doesn't hold, if you're getting hourly H1, H4 closes below that wall, you're getting a test back. It becomes a good cue to be getting involved in a anti-dollar, anti-US coalition, and going short the US dollar and going long on the Canadian, just on the back of that as a trigger. Okay, so that's the dollar Canadian. Need to keep eyes on that, just because she's at this very significant structural level, and what matters here, or what happens here rather, matters. I was going to say what matters here happens, right? Maybe that too, right? But what happens here matters, and so it's worth kind of keeping eyes on that. A breach to the downside, that would be significant, and I think it would be saying something about the dollar if that happens, and maybe there might be. It just means more significant. It just means more significant correction. If you want to try and marry that to the fundamentals, there's every expectation that, or there was every expectation that the Fed would be raising rates in the June meeting. That seemed to have been the narrative which was coming from members of the Fed, but maybe they want to use the last NFP numbers as an excuse to delay further. And if that's going to be the case, the market could lose faith in the dollar very, very quickly. That's what happened with the pound, right? So, it was a crazy year last year, and it was a crazy year considering the stupidity, is the insanity of the forward guidance that was coming from the Bank of England, particularly our governor Mark Carney, who was kind of propelling the pound, talking about interest rate rises and talking about how they would happen sooner rather than later. Before he opened his mouth, the market expectation was tail end of 2015, and by the time he was done, he had everyone believing that it would happen at the tail end of 2014. And then when everyone realized it wasn't happening, the pound took a huge dive, right? So if it ends up being the same story with the FOMC and members of the FOMC and the Fed, and the expectation about rate rises in the US, then the dollar rally can lose steam just as quickly as it gained it, and it can lose traction just as quickly, right? So you just want to keep your eyes on triggers for that, and I think that we have something here on dollar CAD which might give us an early indication. So like I said, in the first instance, we'd look for this to hold with structural support, but if it's breached, I think it'll make an interesting it'll make a interesting play. Can you explain a proxy to oil? this is a proxy for oil prices. No, it's a reflection of dollar Canadian, right? So, sometimes you have correlation between pairs, and sometimes you have inverse correlation. People have often talked about Aussie dollar and gold and being correlated, and they talk about the Canadian dollar and oil being correlated, and a whole bunch of other correlations. But actually, when you're trading, it's not so straightforward trying to trade the correlation. It's much more straightforward if you can do a technical analysis on the pair that you're actually going to be trading. You find correlations hold and correlations break also, right? So it's not necessary. Correlations go out of sync, right? So, if you want to look at, for example, generally speaking, you'd say the pound yen and the euro yen tend to rise at the same time and fall at the same price, but fall at the same time. But when you have an event which affects, say, for example, just the euro, then this year we saw the pound yen rising, hitting all-time highs, and at the same time, the euro yen was falling and hitting fresh yearly lows. So, you have general correlation between pairs, but it's not necessary that that correlation is always going to hold. If you believe that there's a strong correlation sometimes between pairs, what you can do is use analysis, technical analysis on one pair and look for a trade on the other, right? So if you think that oil and dollar Canadian are correlated, I'm not necessarily saying they are, but if you think they're correlated, and I don't know, people produce all kinds of charts for this stuff. You usually find them on broker websites, heat maps, and all kind of, I don't know, right? It may be worth looking and seeing what the historical correlation actually is. But, if you get a short trigger on the dollar Canadian and you find that that oil is rallying or something like that, you might start suspecting that one of those pairs is going to end up reversing, right? So you might start suspecting a false break on dollar Canadian, or you might start suspecting that it's a sucker rally on oil, and you might choose to have that, or we call it, trading the realignment, right? Just waiting for, looking for a realignment to come back, and maybe you can find some kind of trade there. But the analysis that I'm presenting isn't a proxy for oil. It's an analysis for dollar Canadian, and it's a level on the dollar Canadian itself, right? That's the key issue. I don't have a problem using correlations. I like the idea of correlations, but the analysis here is independent in itself, right? If that clarifies. Okay. All right, last one up, and then I think someone wants to look at Euro JPY. So I'll actually got a little bit of time, right? So let's look at NZD JPY first. So this is the NZD JPY, and as my presentation has progressed this morning, my analysis just tends to get more and more out there, right? And we start pushing the boundaries a little bit of our imagination. So I must have come back to this before. I must have talked about this here before, I'm sure, right? But this is one of the kind of out there ones, and it does require a little bit of imagination, but it's the daily time frame that I'm looking at here. And what I'm saying is that what if that is a double top at 94? Okay, so what I'm saying about NZD JPY. What if that is a double top on the daily time frame, which is where it's happening at? Yeah, I know, right? It is, yeah, look at that, right? Okay, yeah, but what if? And if it is a double top on a daily time frame, then your imagination should be thinking, something like this. All right, that's what my imagination is driving me to believe. Is driving me to believe that we could come back to this instrument in maybe 10 years' time or something, and she'll be down at 60. Right? She doesn't have a huge daily range either. All right, she doesn't have a massive daily range, but if she's going to fail, then this would be a pretty darned interesting place for her to be failing at. And what it means is that unless we're going to go and get a triple top up here, right? So, unless you're going to get a price action like this, where, that turns into an even bigger double top, that could happen itself. But so I'm kind of I just hope the ideas are coming across clearly, right? But maybe there's a double top there, right? So on NZD I just look for failure. I look for any sign of failure, and if it looks as though she's failing, I'm taking the short trades on NZD and what I'm hoping is one day I'm going to take a short trade, and she's just going to keep on going and going and going and going. All right. What I do want to mention about her as well is that, and I've mentioned this before, is if you are shorting NZD there's a huge transaction cost involved here. All right. It's not the spread, right? The spread is usually between 2 and 3 pips. It's not a big deal, but you could be paying 2 pips a night in overnight swaps, and you don't want to be doing that. So if you do take this trade, get yourself a swap-free account. Plenty of brokers do them, right? And trade it on that. But anytime she rallies, look for failure. And if you're not looking for failure again, we have the flow in this instance. It's about the 89.40 price area. And so if she does start breaking down and we start seeing her below 89.40, then at that point, just use the H1, H4 closes. And it's just casual exposure, looking for follow through to the downside. Like I said, she does have a lot of room to the downside. And that's if, the idea of a double top having formed there is not entirely insane. Someone might look at that and say it's some kind of head and shoulders formation or whatever. I don't know. I don't trade head and shoulders too often. I'm not a big fan, but double tops, they're always interesting, right? They're always interesting. So I'm continuing to look for failure here, and any sign of failure, I think we could find ourselves in a position from these levels that we could be holding for a very, very long time, and there is room to the downside on the instrument. Okay, folks, that's everything I wanted to cover. I saw someone saying Euro JPY, I think. I don't really have a plan for the Euro JPY. All right, so, but I'm just going to show you what I was saying earlier about GBP JPY and Euro JPY. So, she was at all-time lows, 127, all right, 130s. And if you're looking at GBP JPY, at the same time, right, GBP JPY was up there in the 80s, right? So that's February, and we're looking at Euro JPY in February around here. We kind of see it, right? Yeah, she was at lows. She was at lows, and GBP JPY at the same time was at highs. So you have correlations, and you have correlations breaking also, right? Kind of key. GBP USD. GBP USD, I think, is interesting from a fundamental point of view, right? It's interesting from a fundamental point of view. The reason that it's of interest is that, first off, the prices are back where they were during the last general election, right? The back where they were during the last general election. During the last general election, we had a governor who was a little bit smarter than the current one, Mervyn King, and he actually, although the Bank of England has a policy, sorry, hang on, one moment, folks. Something. All right. Yeah. So, although the Bank of England has a stated policy in not to intervene in the markets, it doesn't mean that it doesn't mean that they. I'm just going to show you. Let's have a look. All right. So the Bank of England has a stated policy not to intervene in the markets, but it doesn't mean that they don't, right? And here is a newspaper cutting from the 13th of March, right? And we're looking here, right? We're looking here. And it happened after that newspaper cutting happened after the event on the following days. But Mervyn King, as the price was falling, said that's far enough. And the moment he said it, the price kind of bounced from this area, right? Just bounced really, really hard. And she went and did her thing, and she pulled back there again, and then that rally ensued, right? And the price went from 147 and she went all the way to 172. And if you're excluding the consolidation phases, she did that pretty much in a straight line, right? But it all started with this guy saying that's gone far enough, right? Just kind of the pound has fallen far enough, and the market listened to that, and then reacted to that, right? So here we are again, back at that kind of level, right? Where we know that the last governor of the Bank of England had issues with the pound being at this kind of level, right? So maybe there's something in that. I do turn up here sometimes with fundamental analysis, although it's fundamental analysis of a different kind. I'm really not bothered with employment and wage growth, and I'm bothered with wage growth always, but not really bothered with PMIs and stuff like that, and all the economic data. But when someone at a central bank is talking about a valuation of their currency, it does pay to kind of give due attention to that. And so what I'm wondering is that, if the Bank of England had issues with the currency at this price level, then maybe they still have issues with the currency at this kind of at this kind of price level, right? So, should we be buying pound dollar on dips? I think if you can find technical support in order to be doing that, I don't think it's necessarily a bad idea, right? But what I've been looking for and what I've been trying to follow are Bank of England statements where they say something about the currency, right? And express some level of concern about it. Yeah, you're right. Maybe not during the elections. After the last elections, I had a different kind of analysis and it was to do with old money, new money, right? So, old money is happy with uh, the pound having a high value because that's money which is passed on through generations. But new money isn't really bothered, right? And the Conservative Party represents old money in as much as it represents new money, right? Is a changing economic landscape of the UK, and so as a political policy, they wouldn't have issues with a raised valuation in the pound. But maybe there's different heading into ideological issues here, which isn't always uh, wise. But yeah, look, if you want to know about the direction of the pound, uh, so long as she's falling, right? But these are levels where the Bank of England has expressed concerns before. The only caveat is that it was under a different leadership, right? It wasn't under the present leadership of the Bank of England. And so maybe they don't have as much concern. If they do, we're going to end up hearing about it. And once you hear that they are concerned, then what you do is just look for bullish triggers only, right? Bullish triggers only. All right, so here's the current breakdown, right? You have a support which is becoming resistance at the 51 price handle. And so if you're looking at a bull trend as a result of invalidation of the bear trend, you'd just be looking at that support resistance area. And a technical play might look something like this, breakout, pullback, and you're finding that the area retests as support, something along those lines. It is worthy of consideration, although I don't have a specific trade call on this instrument just yet, right? But that is worthy. It is worthy of consideration. Not a bad idea to look through it. Right, folks, that is your lot this morning. Again, thank you very much for attending. Thank you to our wonderful hosts at FX Street for providing the platform. Don't be lazy. Check out my website. It's wmdforex.com. I should send a link to all attendees, where I publish my analysis every week, and we have some other traders who publish their analysis on the site also, and their charting. So yeah, check that out. I'll be back here in about 2 weeks' time, and so I'll see you all then. Enjoy what is left of this long weekend, and until next time, bye guys.